Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company that manages investments in mortgage-backed securities has a wild ride? Well, get ready, because Bimini Capital Management's latest report is like a financial roller coaster, but instead of screams, you get spreadsheets. So the report came out on March 6, 2025. It's an update, like a checkup on how the company is doing. This report focuses on how Bimini Capital Management performed financially. Think of it as the company's report card, showing whether it made money, lost money, and how well it managed its business. The period this covers is until December 31, 2024. This is Bimini Capital Management telling everyone how they did overall during the year. They shared the news in a press release. It's like a public announcement to let investors and the media know the highlights of their financial performance. Now let's dive into some of the details. For the year ended in December, the company's net loss, meaning how much money they lost, that can be pinned on regular stockholders, was about $11.7 million, or $1.54 per share. It's like saying each share of the company effectively lost $1.54 during that year. Interest income totaled $3.2 million in 2024. Interest income is the money they made from investments like mortgage-backed securities. It is like the rent they collect on their investment properties. Expenses totaled $15.7 million for 2024. Expenses are all the costs the company had to pay to run its business, like salaries, office rent, and other operating costs. At the end of December 2024, total assets were $50.1 million. This is down from $60.6 million at the end of 2023. Total assets are everything the company owns that has value. This includes things like investments, cash, and other resources. A decrease means they had less stuff at the end of the year. The company's total liabilities decreased to $9.8 million compared to $16.9 million in 2023. Liabilities are what the company owes to others, like debts and obligations. A decrease means they owe less than before. The net book value per share increased to $5.33 compared to $5.01 in 2023. This is essentially the company's net worth divided by the number of shares outstanding. It is like figuring out how much each share is really worth if you sold everything and paid off all debts. So what's the big picture here? Bimini Capital Management faced some challenges but also showed resilience. They had a loss overall, but their book value per share improved. They made less money on their investments. Now, let's dig a little deeper. We need to think about what all this means for the future of the company. Bimini Capital Management seems to be navigating a tricky situation in the market. It is like trying to sail a boat during a storm. They made some money in interest income, but overall, they lost money. Their interest income suggests they are finding some opportunities to earn money from their investments, but the expenses ate into their income. The decrease in total assets shows that the company has less stuff, and the lower liabilities means they owe less to others. Finally, let's look at that net book value per share increasing. It could be a sign that they are doing a better job of managing their money. So, what's the verdict on Bimini Capital Management? The company is currently in a bit of a turnaround phase. They're trying to balance their income and expenses while managing their assets and debts. While they did end the year with a loss, some aspects, like the increased book value per share, offer a glimmer of hope. The road ahead isn't without its bumps. The big risk is that the market conditions could change again. If interest rates rise or the value of mortgage-backed securities drops, the company could face even more challenges. Overall, Bimini Capital Management is a company to watch. They are in the middle of trying to improve their financial health, and how they handle the challenges ahead will determine their future success. Thanks for tuning in to Corporate Decoder. If you enjoyed breaking down this financial report, give us a like, drop a comment, and definitely subscribe for more deep dives into the world of corporate finance. Until next time.